Hey there, speculators. It's Rod, your Futures Fanatic. Welcome back to the channel. Futures Fanatic, want to always remind you, is for educational purposes. Make sure you read these risk disclosures and disclaimers before watching this video. All right, wanted to use this opportunity to talk a little bit further about trading micro futures options on the stock indices for the micro futures, specifically the MNQ and the MES. And today I wanted to do a quick little lesson because an opportunity arose where essentially I'm starting to, I wouldn't say it's not hedging, it's just adding some security to a short. So let me talk a little bit more about what that means. So right now I'm short the Nasdaq 3 contracts here. You can see the Nasdaq has basically, let me move this over here. We're looking at this point right here, which is the VPOC high volume node right near the prior session's high. This price right here, this node right here, which is 16,000, that's going to be important, and then these other two. So essentially, this is like a quad distribution. I call this a shark tooth pattern in terms of the volume profile. And again, I'm short the underlying, but one of the things I did once this started to creep up a little bit and then come back towards 16,000 is I actually sold some puts for tomorrow. I'm recording this video on a Thursday, and so basically these are 1 day till expiration MNQs. And let me show you what those look like. I'll show you them on this one right here. So that's the MES. Let me go get the MNQs. I'm trading them on Interactive Brokers, but I'll show them to you over here. So this is the one I want, and let's hope it brings in the strike. Okay, so right here is what we're looking at. I know that it's flashing a little bit of yellow, but essentially the bid is 55. Now the way these options work, and I've explained this in past videos, is each contract that you're long or short only represents one of the underlying. So that's a very powerful thing. So the account that I'm doing this in has about $10,000, but it allows me to, plus you get span margin, which I'll get into maybe some other video. But essentially, when I sell this here at around, let's say 55, I get credited 2 times 55 or $110 credit. Now let me bring over here what the actual position is right here. Nope, just a second. Right there, so we can take a look. I know this is going to be a little bit small, probably really, really small. Let me make this right here. I'll try to zoom in some post-production so you can see it a little bit more clearly. But I have sold 2 at an average price of 55, and that has a cost basis, in other words, a credit value of $219.06. Now, I'm short the underlying right here, okay? I'm short 2 puts from 16,000 and short 3 of the underlying. So essentially, these puts are riskless at this point. Now, how could I get hurt on the puts? Well, if the market reversed really, really hard, that last one contract that I'm short should make up for being short the 2 puts here. And as you can see, I'm going to cover one at 16,000. So basically, that position would be kind of like hedged off. So this is one of the things that, again, you can't do this in the prop programs, and not only people are teaching and training on this, but since the underlying is deliverable as 1-to-1, it makes it, I would say, very easy and manageable to be short puts or short calls. So for instance, if I was long here and the market really rallied into the close, I could actually sell some upside calls, 16,100, maybe 16,150. Tomorrow's a Friday. We've had positive skew for quite a while on Fridays. Not always, but we've had basically some positive skew on the Fridays, meaning the markets have drifted up and stayed strong on Fridays. So if I was long, I could look to sell some calls, and then essentially those would be covered calls. And again, what makes this a lot better, I actually think, for a lot of smaller accounts, people think that futures have so much risk in them, and they're very levered products, but you can kind of unlever the options component of futures by being able to trade around the underlying relative to your position. So again, one last thing, I'm going to try to keep these videos really short now and just make more of them. I say that all the time. I thought I had a goal of 25,000 subscribers for 2023. And I don't blame you guys for not subscribing to the channel. I barely made any content this year. But next year, New Year's resolutions, let's see if I can get some stuff going on in December. So it would really help if you do like, subscribe, turn on the bell notifications if you want to learn more about this type of stuff. I try to make content that's as useful as possible in terms of things that I don't see as many people out there talking about, and that definitely happens to be options on futures. In fact, you can see with the volume here. Let's look at the volume on the 16,000. The put is 416 and the call is 279. That's against the MNQ that has traded over 1 million contracts today. So let's get more involved in this because it's a good way to express positions and put positions on that can either hedge or give you more directional oomph, if you will. And that's what we're going to be doing here on the channel. So again, like, subscribe, turn on the bell notifications if you'd like. Leave a comment down below if you have any questions specifically about this. And I will be doing more content on futures options, specifically the micros. Also, I'll put a link down below where you can get access to this platform if you'd like, and 2 weeks of free data. So you can actually practice these, get used to them. The only way to really learn how to do this is to essentially practice. And then the final thing on this put that I'm short right over here. I think now that I see that this screen was over everything I was talking about, so hopefully it'll make sense when I watch it afterwards. Anyway, we're looking now at the Interactive Brokers screen here, and this particular put is a 16,000 put for tomorrow. So let's say that, let me move it out of the way, that the market actually declined tomorrow significantly, or even for the remainder of today, and started to fall and closed tomorrow below 16,000. I still had those puts open. Well, the first thing is I'll collect all of the premium because they'll be out of the money at that point. But what essentially would happen if I wasn't also short the underlying, if I was just naked short the 16,000 puts and the market closed below it, I would be long from 16,000, but only the 2 contracts that I'm short. So let me actually go in here. I said I was going to make this quick, but I just want to put this in here. Short. Somebody got pissed when I said being short. Never mind. I'm not going to get into that. So I have sold to open the 16,000 puts, and that's 1 day till expiration. Let me make this a little bit bigger so you can see it here. Boom, boom, boom. Big white font. Awesome. All right. So I'm short these 16,000, and I'm a little anal, so I want to fix that. 1 day till expiration. All right. So if you understand the basics of options, you should follow along with a lot of this. If you're newer to futures options specifically, aside from my content, which is few and far between, as I just mentioned, you can go over to Tasty Works, Tasty Trade. They have a lot of good content on futures options. They're one of the premier brokers that actually do that. I happen to trade at Interactive Brokers and at StoneX, which is the link that I'll leave down below if you want to sign up for a free demo for that. But the final point on this is if I were to be assigned these, and right now, based on this position, I have no assignment risk because I'm short 2 of the 16,000 puts and short 3 of the underlying. So there's no assignment risk. If the market stays above this price, then it doesn't matter. I'll just I won't get put, and if it goes below that price, then I also wouldn't get put because it'll just take away 2 of the underlying. All right, but it's only assignable as one of the underlying. Makes it very, very powerful. All right, that'll be it for right now. My name is Rod, the Futures Fanatic, reminding you to stay green, trade like you mean it. Leave the description, check the description down below, not only for a link to where you can get access to this options chain if you want to practice a little bit, also you can find out more about TDG, the Traders Dev Group, where I help active futures traders pass futures prop programs the right way, which is trading small accounts using the micros. Stay green, trade like you mean it. Thanks.